Hello, everyone. It's a baking hot day here in the UK, so I thought I'd just come in from the heat and take a look at a couple of charts for you. Well, this is the Ripple chart, and I think some of you who followed me for a while will have perhaps seen that I've used this to our advantage over recent months. In fact, I think it was back end of last year when the price of Ripple was up at around 70 or 80 cents and suddenly started dropping like a rock. And fell down below sort of 25 or 30 cents, some sort of halving in price or even more, at a time when I think cryptocurrencies generally were doing much better. And I think there was a panic that Ripple was going to go to zero and cease to exist or something. It was to do with Ripple's access to coin exchanges, I think, if my memory serves me at the time. But the arc, which I'd already drawn, this sort of inner arc shown by this dark line, did its job and supported the price. Price bounced off the arc, as is usually the case, and began to move upwards, at which point, I was able to be really confident that there was nothing to worry about. The reason I've drawn this secondary arc on here, it's probably not necessary, to be fair, but the price spiked down to this point here. So all I've done is use the same sort of starting point and ending point, but just drawn this secondary arc on here because it's this spike has set a little bit of a precedent, really, so that if there are any further spikes down, they should be halted by the support that's given on this secondary arc. So having said all of that, the 12-month moving average is something we need to keep an eye on in a bull market, of course. 12-month moving average currently at around about 56 cents. So with price at around about 58 cents, it's just a little bit below where we currently are, and should give support. It's interesting to see that it's the 12-month moving average is coming in at the moment just about on the edge of the arc. So you've got a sort of double whammy of support there that should hold the price up. If it doesn't, then there's something clearly to worry about. So this is the whole reason for drawing these arcs and keeping an eye on these moving averages, because it identifies support levels that can give us a really good red flag if price moves below that level. Gives us something to be a little bit more concerned about. But as long as we stay above the moving average and above the edge of the arc, then it should play out pretty much as forecast. I mean, you can see my red arrow on here, which I put on back in whenever it was, early this year, I think it was, just after Christmas. And it shows the general path that I expected the price to take. In other words, just following fairly close to the edge of the arc, or at least to indicate that we were on a path towards zone number 3. What's happened in reality, of course, as usually does, is price doesn't follow a nice curve or a straight line. It bounces around and kind of gets there eventually, one way or the other. It already reached my zone 3 level. Actually, it got up to around about $2, which is in the zone 3 price area, but it did it too early, in my view, and price has pulled all the way back to the edge of the arc, which is what I would have expected. And also, if you look across to the left-hand side, price is pulling back to a sort of a zone or a level where it dropped to on the way down, found some support. So that's relevant as well and important. So at the moment, it's all going according to plan. We've got the stochastic RSI at rock bottom, which is well poised to support any potential move to the upside. So it's a case of watching and waiting. We're putting a new touch point here. So we've now got, in fact, I haven't marked them all, have I? There's a touch point here, there's one here, there's one here, there's one here, here, and now there's one here. So it's all very normal price action until or unless the arc breaks. So that's where we're at the moment. This detailed analysis is for members only. I'll put the basic chart out on Twitter, just so people have got the basic overview. But obviously for you guys here on the website, I like to give more detail and more sort of analysis and more breakdown of what's going on. So also to mention, of course, the market leaders, Bitcoin and Ethereum, are very similarly poised on a cliff edge, and we're kind of waiting to see what happens with those two, because that will determine the fate of all of the cryptocurrency sector. So if Bitcoin and Ethereum fail to hold their important levels, then these are all going to break and head back down, close to probably getting quite close to zero in some cases with some cryptocurrencies. In fact, many cryptocurrencies and altcoins would probably cease to exist at that point. I keep saying that's not my expectation at the moment. I'm expecting this forecast to play out, but it's at that point now where we need to be really cautious. Okay, that's it from me. I'm going to go and cool down with a bucket of iced water, I think, but I hope you found that useful. And as always, thank you for watching, and thanks for listening.